All right, I think we're recording now, so I appreciate you all being here this morning on this Thursday. I appreciate you all joining on with the Urban Chamber. This is another opportunity to get some great content, some great learning from the Urban Chamber to continue to grow and expand your business. So this is part of our Money Smart series, which is another part of our Capital Connection series, to be able to share some information with you all that'll hopefully get you to the point where you want to be with your business. So today we're talking about banking services. The banking services series is really based around who's your best bank to work with, what bank are you currently working with, and how to better take advantage of those services that that bank offers. So we're going to go ahead and get started. Let's get rolling into the program. I appreciate all of you that have joined on with us today on the virtual series. So we're going to get going into the program today. Next slide, please. So, like I said, today we're going to be talking about banking services. There is a pre-test that's available for us to take today. We're going to take about 10 minutes, 15 minutes at most, to be able to go through the pre-test. That'll help set the game plan for the rest of our session this morning. That'll give us a context for where you are in your banking services, where you are with your current banking relationship, and where we might need to take some advantage of opportunities that are available to us in your banking relationship as well. We'll go through the agenda and our learning objectives for today as well. Business banking fundamentals. That's really talking about what do you need to focus on as a small business owner. Talking about those business banking fundamentals. If we can go back to the first slide, thank you. Right now, choosing the right bank. Oh man, that's a big topic for me. I've been a banker for 15, 16 years now. Talking about choosing the right bank. You really have to interview your banks. We're going to get into that discussion as well. But additional banking services, we're talking merchant services, payment services, lending. There's so many services that a bank offers. It's almost going into a convenience store and saying, okay, do I want the Snickers or do I want the Mars bar or whatever? That's really what we're talking about. Additional banking services. There's so many services available to you. Which ones do you need to take advantage of at this time in your business cycle, and where do you see yourself going forward? Improving your chances of getting a loan. Now, my background is being a lender. So, being a lender, working in the world of SBA and small business lending, this is one that's real near and dear to my heart. So, we're going to go really in depth about what it takes to get a loan from a bank, and not just from a bank. There's many other lending sources we could talk about, but that's one that's near and dear to my heart. We'll follow up with the summary, post-test evaluation. We'll really go through and say, okay, from the beginning to the end of this session, where did you end up at? That's going to be important not only for us but for you, so that we can keep moving things forward. Now, we're going to talk about these learning objectives as well. Identify the banking services commonly available to small business and explain how these services work. Identify the advantages and disadvantages of each of the banking services. Explain how small business owners decide which banking services are best for their business. And we're going to also talk about define several forms of deposit insurance. Those are some big topics. Also, describe some benefits of building effective long-term relationships with the banker or lender. Like I said, I don't want to be the only banker on the room, and we'll talk about that as well. Describe the role of personal credit score in the lending process, which is a big, big, big thing. I don't think we talk about that enough. Explain the benefits of separating business and personal bank transactions as well. That's going to be a big topic for us. All right. So we're going to talk about real quick. What do you know or want to learn about banking services? I know we got a few people on the call right now. If you want to go ahead and chime in, you can go ahead and speak your voice and say what are the kind of things that you want to know about or learn about banking services. I can tell you a few of my key things I know a lot of people bring up in many situations. A lot of times people come to me and they say, Jaron, who should I bank with? Should I bank with you? Should I bank with this bank? Should I bank with a local community bank? And I'm going to really tell you, really, sometimes it may come down to the fact that you need multiple banks. You're going to need multiple institutions that provide different services. And a lot of times that's the best solution that works for you. It can be hard, a little bit harder to manage because you're signing on to different accounts, you're working with different bankers and such things. But what I will say in this age of virtual banking and what we're doing now, when you can go online, you can send wires, you can do payment services, you can do so many things online. It almost makes sense to have banks that have that technology capability that fits what the new age, what the new age of is today, and say, okay, I'm gonna work with this bank because they have the technology that fits my business. But at the same time, does that work for you saying I'm gonna go back and get loans? I need lending. I need someone to be my consultant, my advocate. That may not always be the two in one and the same. So it's okay to say you have multiple banking relationships. So, what do you want or what do you want to learn about banking services? I would say that's a big one. Just talking about the different services that are available to you. Next slide, please. So, factors to consider when deciding what banking service you need: checking accounts, saving accounts, certificates of deposit, account access. I kind of went into this a little bit already, but when we're talking about checking accounts, right? What is a checking account? A checking account allows you to do multiple transactions over a multitude of time and say, okay, that's my account where I'm going in and out of. I'm moving money. I'm doing transactions. I'm doing business with this account. Savings accounts and certificates of deposit, you're really talking about that's savings. So, I mean, it says it in the title, right? Savings accounts. So we got to talk about at some point with your business, you're going to get to a point where you say, okay, I have money available to set aside. I'm going to set these funds aside. What am I going to do with these funds? Am I going to put into a savings account where I'm getting 0.1% earnings on it, or am I going to do a certificate of deposit where I can say, okay, I'm going to put the funds into a certificate of deposit, and have a longer term of savings, but at the same time you get a higher savings rate, which is always a good thing. You get the interest rate that's going to be a higher rate of earnings, but at the same time, you can't pull the funds in and out like you may want to at that time. So it goes right into that next statement. We're talking about account access, right? Access to those funds. So when you're talking about your funds are in a savings account or a certificate of deposit, you may not have access to those funds like you want to. And a certificate of deposit is one of those things where it's like, I'm gonna put the money in, the bank is gonna tell me I have to leave the funds in for 6 months, 12 months, 3 years, 5 years. It could be any term that they decide, but you can't pull those funds out without some kind of penalty. A savings account, even with savings accounts, there's parameters about how many times you can make withdrawals from that account because that's the way they set it up so that you can get the earnings rate that they're saying they're going to give you for that account. Now, when you talk about account access, that's the big thing. So a savings account, a certificate deposit may not be the best option for you, but hey, a checking account gives you that ability to say, okay, I'm going to pull money in and out, move funds as I need to, and that's going to give you the ability to do what you need to do to run your business. So that's what you have to think about at the end of the day. What do I need to run my business on a day-to-day basis? And account access can be a big part of that. Next slide, please. Yeah, so we're going to also talk about discuss the banking services you need. What are some of the services you try to find in a bank? There's going to be so many things that there's so many suite of products, right, that a bank is going to offer. It's really what's important to your business. A bank is going to say, okay, you want to come in, we're going to ask you to bring your deposits to our bank, but you have to always think about when you bring those deposits in, what is the bank giving to you in return? Your ROI is really important. And when I say that, I'm talking about, okay, am I concerned about my AR, my accounts receivables, my accounts payables? Do I need online banking? Is online banking a key concern for me? Is lending a key concern for me? So when you go and select a bank, and I talked about this a little bit already, but sometimes one bank may not be the best option for you. There may be multiple banks that you have to utilize to get all the services you need because maybe a large bank gives you the technology and the access you need, but a smaller bank gives you the lending that you need and the personal service that you're requiring at that time in your business. As you grow as a business, those things may change, but that's always a big consideration for you as well. So we're going to the next slide, please. Business banking fundamentals: ATM usage and availability, customer service and relationship, accessibility, drive or walk, park it, drive through, products and services, fees, deposited funds and availability. We'll go kind of go through this list. So once again, we already talked about access, right? Access talks about ATM usage availability. Can I go and do a Dropbox availability? So there's a lot of businesses that may do large cash deposits and they may not be able to get there between banking hours, between 8 and 5 or 9 to 5 or whatever. So they need to have availability to say, okay, I can go to the Dropbox and drop off my cash. I need to go drop off a large amount of checks. Businesses that collect a large amount of checks, like HOAs, maybe some people that collect a lot of rent income. They say, okay, I get a large amount of checks. I need to have availability to deposit these checks outside of banking hours. So ATM usage and availability becomes a big deal for those types of business. Customer service and relationship. I can't harp on this enough. Banking has changed a lot over the last few years. Like I said, I've been in the banking industry 16 years. I remember when we didn't have the plexiglass windows. You could walk up and say, "Hey, I have a deposit. I want to do this. I want to do that." Now we have this world of plexiglass, and maybe there aren't that many tellers at the windows. So you go in and say, "Okay, I need to get a cashier's check. I need to make a deposit, and there's only 5 tellers here." That becomes a concern, right? So the smaller banks are moving towards that. Okay, we're going to continue that method of saying we're going to have many tellers, we're going to have many windows open. We're going to let you walk up, do your deposits, do your transactions as you want to. But the large banks are moving away from that, and the large part of that is because of technology. So when you talk about customer service and relationship, that becomes a big part of that banking decision. Do you value being able to go and go into a bank and talk to somebody individually, or do you value saying, okay, I can get in and get out real quick? So it's really about what you value from your business standpoint, and what does your business need to be successful. And when it goes right to the next point, right? Accessibility, drive up, walk, parking, drive through. That's another thing. Like I said, we talked about the Dropbox. People be able to go to the drive-through lanes. How many drive-through lanes do you have accessible to business owners? That's a big part of your banking thought process, right? Like how much is this going to take? And you always have to think about it from a time evaluation standpoint. It's like, okay, if I go to the bank and I have to go and sit in a line, how much does that cost me from my business? And you say, okay, I pay myself 30, $40 an hour, $50 an hour. If I have to sit at the bank for 30 minutes to an hour, I just lost 50 bucks right there sitting in the banking line. So accessibility becomes a big part of the conversation. Products and services, that's a huge, huge, huge thing. Because if we're talking about products and services, the bank can offer so many suite of products, but how do they deliver? How do they execute? That really becomes important to your business because it could hinder your business or make your business go to the next level. That's something you have to really evaluate. Fees are a big deal. Banks are moving to this model of feeing the death out of people. They're not making as much money off of loans like we used to. Interest rates are still, even though interest rates are going up, they're still lower than what they have been in the last 20 years. So banks are saying, okay, we'll use this fee model to recoup the income that we were losing on loans. So they're saying, okay, we'll fee you to death. Fees can be really costly to a small business. So that's really a part of the evaluation process when shopping banks that you have to talk about. Deposited funds availability. Smaller banks struggle with this. I'm going to be honest with you. I'm going to be very transparent. Smaller banks struggle with the availability of funds. If you go to them and say, okay, I'm going to deposit funds today, it's not always likely that you'll have those funds available tomorrow or even same day. Where with the larger banks that have clearing houses and all these different resources to them, they can clear those funds in the same day and say, I'm going to have those funds available today. So it's a big factor when you're talking about who am I going to bank with? So that's a big factor we want to talk about today as well. Next slide, please. Checking accounts. Oh man, this is a big one for me. And I say that because it really goes into the mix of doing small business lending, talking about the success of your business. Checking accounts are a big part of that. And hopefully most of the people that are on the call today understand that a bank is going to be your main factor in trying to have your business success. And I say that because there's always, certain people you want to have in your circle that make your business successful. Bank is going to be a big part of that. But checking accounts go into that discussion of whoever your business banker is that says, okay, am I going to have the resources I need to be able to make my business successful? So from a small business or commercial checking account, so when you're talking about checking accounts, right, it's really talking about who you are as a business. Where you are in your business cycle. Am I running 1,000 checks through? Am I running 1,000 merchant payments through my account each month? It's really going to boil down to, okay, you got to go to your business banker and say, here's where I am in my business cycle. I'm doing this kind of activity, and what account really fits with the activity I'm doing today. And then at the same time, you're talking about payroll and operating accounts. Payroll is a big one. Payroll is a big one. I always tell people payroll can involve multiple accounts. You never want to be in a position where you can't make payroll. If you can't, hopefully your bank is giving you lines of credit, lending, or something to make that. But you never want to be in a position where you can't make payroll. So you have to have your account set up where it may be multiple accounts. You're going to have to separate maybe your expenses and bill payments from payroll. And payroll includes things like taxes. You're going to have to pay payroll taxes. You're going to have to pay FICA. You're going to have to pay all these different things. And it's like, okay, you cannot not have that money available because you're getting to a whole world of hurt. And I don't want to go into that, but you're getting a whole world of hurt by not having those accounts separate. So if you learn anything from me today, it's always talking about having separate accounts for separate purposes. So payroll may need a separate account, operating expenses may need a separate account, and you may have separate accounts just to make bill payments. But having multiple accounts is not a bad thing. Just get a system in place that works for you to have those accounts and be able to manage everything. That's why I say online services are a big thing. And you see it right there in the title, no co-mingling. And right to the next account, no co-mingling. And not just from, and we already talked about it a little bit, right? We're talking about no co-mingling from business accounts, but also personal. You don't want to mix in your person. Oh my gosh. I can't tell you the nightmare stories that I've heard of people mixing their personal accounts with their business accounts. They're going out and paying personal bills and business bills from the same account. That just leads to a nightmare. And I don't want, I'm not, we're talking banking services today. So I'm not going to get into the CPA and bookkeeping discussion too deep, but ensure accurate bookkeeping. Banking really leads into that bookkeeping discussion. You really have to be cognizant of the fact that, hey, my business and my personal are separate. And I'm doing two separate things. But at the same time, if I mess up my business, it could mess up my personal expenses and vice versa. You're only one step away from each other, right? The business is only one step away from the small business owner. But at the same time, we have to understand keeping accurate and accurate bookkeeping is going to be a key part of your business success. Avoid tax consequences. I am no tax expert by any means. I'm only going to tell you enough to be dangerous, but I'm going to tell you enough to say that taxes are one of the biggest killers of small businesses. When you're talking about payroll taxes, income taxes, sales taxes, there's so many opportunities for the IRS to come in and say, "I'm going to ruin your business." Please, 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 if you don't leave with anything else today, please consult a tax accountant, a CPA, a bookkeeper that can help you with this process because taxes are one of the biggest killers of small businesses. They'll have extreme growth, expansion, all these things. But next thing you know, they have a huge reset because of taxes. And it's one of the things we look at as bankers. How have you evaluated your tax structure going forward? Those are one of the biggest things that we talk about as bankers. Next slide, please. Oh my gosh, payroll services. This is one of the biggest things that I always talk about: preventing potential fraud or forgeries, record keeping, direct deposit. So payroll services can be one of those things that can make or break a business. If you don't have a solid system in place for payroll services, and what I mean by that is consulting, maybe a pro services company like ADP, Paychecks, some of these other ones that are around, you can consult with them. But what happens is if you don't account for FICA, if you don't account for Social Security, some of the things that if we're lucky here in Nevada, we don't have state taxes, but state taxes, those are some of the things that if you don't account for as your business and you don't pay enough taxes, that's a big, big, big issue for a lot of people. And at the same time, when we're talking about payroll services, we're talking about just accurately accounting for people's payroll. People can come back, and a lot of times there's a lot of lawsuits, issues that come back to bite people because of payroll. And also, people can take advantage of your business if you don't have proper payroll services. They can come back and say, "I worked so many hours this week," but you're saying, "No, you only work this many hours." How do you have record keeping and stuff that can associate with that? And that's where the record keeping piece comes into play, right? We're talking about, do you have proper systems in place today that can say, okay, I have accountability, and I can also come back and justify any decisions that I made from a record keeping standpoint. Direct deposit. I think we all know that nowadays direct deposit is the way majority of people get paid, and it just makes things so much more convenient for not only the business owner but for the employee as well, to say, okay, I know my check is coming tomorrow, it's going to get direct deposit to my account, I can do what I have to do. Writing checks, the liability, the cost of that, it just gets crazy. So direct deposit is a big thing. Cash management services. This is a very complex thing, right? You're talking about sweep investment account, other sweep accounts, online funds, transfer, lockbox service, deposit pay. So first we'll get into the sweep account. I'm not sure how many business owners we have on the call right now that really would utilize this service. But sweeping is, okay, overnight, the bank is going to say, okay, overnight, I'm going to clear all the balances from this account and move it to another account. That's what a sweep is. So and that's in the most basic of terms. It's just saying, because it could be multiple different accounts, but the bank is saying, okay, you're going to put funds into this account. I'm going to move all the funds out of that account overnight and move it into another account. That can be in multiple different avenues, right? So we talk about other sweep accounts. There's things called Z accounts, right? So if I have a loan with a bank, it's based on my investments in an account. The bank is going to say overnight, I'm going to sweep the funds from your investment account to repay this loan, and we're going to move the money day to day. Those are very complex situations, but sweep accounts can become very advantageous, right? If you're dealing with rent collection, HOAs, different accounts like that, right? Where you're always collecting deposits, but you need those funds to go into other areas very quickly. That's where the sweep accounts become very important for your business. They're very complex, but they can become very important to some business structures, right? Online funds transfer. Oh my gosh, like the world of technology that we've moved into when it comes to banking, being able to move funds from one account to another is become very important. So being able to say, okay, I can do an online funds transfer without sending a wire, without saying I have to send funds overseas or whatever. Like, and we're probably, a lot of us are accustomed to it now, right? We have Zelle, we have Cash App, we have all these different accounts, Venmo. You know, we can send funds to different people. And I'm going to throw this in there. One of the big things we're talking about right now is crypto and being able to send funds through the crypto. and being able to use a blockchain to move funds from one account to another without the cost of using an intermediary bank. So those are big things right now that we're talking about in the banking services world. Lockbox service. Lockbox, pretty simple. It's just I collect a lot of checks. I'm gonna have people send those checks to a central location, which is the bank. They're gonna provide me with a lockbox, which is saying they're gonna collect all those checks for me instead of me having to collect all those checks. Once again, HOAs, property management companies, they use this service a lot, and they're gonna say, okay, I'll collect all the checks as a bank, and then we're going to deposit the funds into your account on different days throughout the week or what have you, because we're collecting the checks throughout the week. Lockbox becomes very important. Positive pay. Positive pay is one of those things that becomes very, it's another complex concept, right? Positive pay is, okay, me as a company, I send out a lot of checks. I pay a lot of people by check. I do electronic checks. I do payroll checks, all these different things throughout the course of my business cycle is send out a lot of checks. What you do is go to the bank, say, okay, I've paid these checks to certain individuals. Please make sure that these are the only checks that come through my account. That's what positive pay says. Positive pay is I'm positively saying these are the checks that cleared my account. And if that check's aren't on the list, please bounce them back. Next slide, please. Savings accounts. So savings accounts are, and we went into this discussion a little bit already. There's so many limitations on savings accounts. And we talked about certificates, deposits, but savings accounts are a big one, right? Savings accounts are it's really I'm saving this money for a date later in the future to pay for certain things. It may be taxes. It may be I know I have a large expense coming up for equipment or different services I know I have to pay for. I know I'm trying to build to be able to buy some other assets for my business. So savings accounts only allow you to withdraw funds so many times per month. So you have to be really cognizant of it because they'll start charging you fees and different things because you're transferring money in and out of a savings account too much. That's why we talked about the checking account. The checking account may be a better option for your business because you're moving money on a regular cycle, right? And if you're doing that and you're moving money around all the time, it's good to say, okay, I need a mix of accounts. Certificates of deposits are very restricted. Certificates of deposits have some time frame, 6 months to a year, 2 years, 3 years, whatever. The bank is going to say, I'm going to pay you a savings rate of this amount, but you have to keep the money in this account for this time period in order to get the full savings rate. If you don't, I'm going to charge you a penalty. That's what certificate deposits are. They're very long term savings plans, but they work well for, and I keep saying this example, but HOAs use them a lot. If you have an HOA in the community living or your HO company, you'll go in and say, okay, I'm gonna put all this money into this account and save them for a later date. But they work out well for certain businesses. So business account access, depositing sales with remote deposit scanner or online access. So some of you may have this service already or have thought about it, but companies that collect a lot of checks, say doctors' offices, they collect a lot of checks. People come in and pay by check. So what do they need to do with all those checks? They may not have time to make it to the bank between 9 to 5. So what they get is a deposit scanner, so an actual little scanner that scans the checks, runs them through, and deposited them the same day. And then with checks is check availability. You have funds available whenever the bank says next day, 2 days, whatever. But that little device makes your life so much easier. It saves time, energy from having to run to the bank, having to go and count for different checks that people send in, mail in, whatever. That little scanner saves you so much time. Online access. I think this is becoming one of the key evaluation methods for people deciding who am I going to bank with. What is my online access going to look like? So you talk about a deposit scanner, right? The scanner is going to be able to scan the deposits, but hey, how do I go in and say, okay, did all those checks go in that I sent in? What's my current balance? What funds do I have available to send? to pay with other bills and that sort of thing, online access is a key thing. I don't know if many of you have dealt with it, but banks are reducing their call centers, they're reducing staff. They're not having all these people available for you to call in and say, I'm going to call this person and see if I can check my balance. Can I check if the deposit went through okay? They don't have a lot of people. So you could spend 30, 40 minutes on a call trying to just check a deposit. So online access becomes very key. And especially when you're talking about, I'm doing remote deposits and I'm doing my deposits remotely. I need to be able to go online and say in real time what happened with my deposit. So this is a big deal. So please be cognizant of that when you're talking about the online access as well. Deposit insurance covers businesses that have sole proprietorships, corporations, partnerships, unincorporated associates such as not-for-profits and for-profits, and fiduciary accounts. So FDIC, what is FDIC? FDIC is the insurance company for banks. So banks pay them so much money to say, okay, I'm going to insure you. I want you to insure my deposits. So they insure your deposits up to a certain amount. It's up to 250,000 now. Now, and we could talk about this later on, but credit unions have their own depository insurance company, NCUA, that actually provides insurance for them. Credit unions are a little different. But at the same time, when you go to a bank and say, I'm going to deposit my funds into this particular account, what surety or what reassurance do I have that my funds aren't going to get lost? Those of us that lived through 2008, 2009, 2010, remember the days when people were standing in front of the banks in lines that were 10 hours long trying to figure out what happened with their money, right? Now the FDIC has said, hey, we've insured your deposits up to a higher amount. It used to be 150,000. 250,000 is much better. But what you could do as a sole proprietorship, a corporation, or a fiduciary is I'm going to split my accounts up. So we talked about this earlier, right? It's talking about, okay, I'm going to have multiple accounts. You may have multiple accounts with multiple banks. As you spread those funds out, and I'm going to give you a little insider tip, multiple banks, that FDIC insurance is bank to bank to bank. So if you have multiple banking relationships, that FDI insurance only covers that bank. So you can say, okay, I bank with Bank of America, I bank with Nevada State Bank, I bank with Bank of Nevada. Each time you deposit funds in those different banks, each bank you have availability of 250,000 in coverage for that FDIC insurance. So a little insider tip for people to think about. So sole proprietorships, corporations, there's no difference in the FDIC insurance. It really depends on who's going to be the beneficiary of the accounts, who's going to get the benefit of those accounts, is what it comes down to from an FDIC position. Business debit cards, owner others, convenience or risk. This is a big deal right now. And I know I keep using this term big, but it really is, right? As we go to this more virtual and online world and payment, right? The forms of payment that we're utilizing, there aren't many people using cash nowadays. So it's really coming down to debit cards and being able to use that card to go from place to place and make payments. So you're going to have the people that own the company that say, okay, we're owners of the company, we have access to the accounts. That makes sense, right? But hey, what if we have employees that need debit cards? They're buying supplies for the office. We have individuals that are drivers, right? They need to buy gas. Maybe they're out paying for their lunches. And a big thing in the remote world and a remote workforce is everybody gets a company card. They're taking people to lunches. They're going to events. They're staying at hotels. The risk of that is great, right? But at the same time, there's ways to put controls in place around that debit card or a credit card, even. You may offer them a credit card that allows them to do those certain things. But what ends up happening is with the banks and certain banks, and this really comes down to technology and services and conveniences that are available to you. But some banks allow you to put certain concerns, like say, I'm going to give them a spending limit. They're only allowed to spend $500 a month. There are some banks that even can dial it down now to say they can only use the card at certain places. This card is only good for gas. This card is only good for staying at hotels. This card is only good for going to restaurants. So those are some of the things that we have to talk about when it's saying, okay, debit cards are a great convenience, but let's control the risk. It's not about the risk is too great, but let's control the risk when we talk about issuing debit cards to our employees. Next slide, please. Merchant processing services expand capabilities, credit cards, debit cards, gift cards, online payments, and sales. This is a big one. And we talk about this a lot because this is really talking about how do I receive income to my business and how do I allow my customers to do business with me. That's a big topic that I think we need to talk about a lot of times because we're talking about merchant services. That's what it really comes down to credit cards, right? Am I going to accept Amex, Visa, Discover? Because each of those comes with a different cost. So we talked about fees a little bit as well, but each of those comes down to a different cost of what am I going to allow my customers to use as payment services because it's going to cost me as a small business owner a different cost to do each of these different ones and make it available to you as a person doing business with me. Debit cards, we already went into that pretty in depth, but debit cards are a big one. Want to make sure that people have ease of access, ease of payment when it comes to debit cards, the tax services, being able to scan it, Apple Pay, Samsung Pay. Those are big deals right now. Those are things we want to make sure are available to our customers. Gift cards. Gift cards are a big concern to me. I'll kind of tell you why. People are allowed to pay with gift cards a lot of different ways. Gift cards can get small business owners into a lot of trouble because people can say, okay, I'm going to use my credit card today, pay for this gift card right now, but they didn't pay their credit card bill. So you know what happens? They actually didn't pay for the gift card. The gift card now becomes a liability for the issuer. So now you go to some places and they say, okay, yeah, you can pay with a gift, you can get a gift card, but I'm only going to allow you to buy the gift card with a debit card or cash because they're concerned about getting returns because people don't pay for them with their credit cards or whatever. There's so many different situations where companies can get into situations that aren't good for them because they issue gift cards. Gift cards are always good, though. It's good to offer, especially in the retail world when you're talking about I'm selling gift boxes or gift items or whatever. People can go out and say, okay, I got a gift card. I'm going to buy this. I'm going to buy that. But just be cognizant of that concern. And online payments and sales, right? Different availability of doing online payments. Can people pay with a credit card, a debit card? Do they need? Can they use a checking account? There's so many different ways you can pay, right? What are you going to offer to your customers to give them ease of access to buy products from you? That's what you have to think about as a small business owner. I want to make it easy for people to do business with me. I don't want to make it difficult for them. So, what is the ease of access? Is it online payments, gift cards, debit cards, credit cards? That's what we're talking about. Ease of access to do business with me right now. Next topic, please. Or next slide, please. I apologize. Thank you. All right. So everyone should have received their participant guide. So in that participant guide, there's a couple of sheets. So we're going to ask you to go to page 16 right now. And at page 16, we're going to take a couple of minutes to do this. Please, if you want to go through, do column one, which says list the services you need now. Column two, list anticipated services for the next 6 months to a year. Column three, list services you plan to get in the next 2 years or see as the future needs of the business. And then column four, assign a date to each service in place or reevaluate it. How will your banking services needs change over the next 2 years? So like I said, we're going to take about 5 to 10 minutes. We're not going to take long. I'm not sure how many people we have on the call today, but we'll just take about 5 to 10 minutes. Have you go through that, and then we'll jump right back into the program. But please take the opportunity to do this because it'll lead into the rest of the conversation that we're going to have today. We're going to take a brief break right here. If you want to go ahead and jump in, if anybody has any questions or comments, I think we have the chat open for people to do that, and we could definitely go through that as well. So about we'll say 10 o'clock, we'll go ahead and get jump right back into the program.
Sharon, Diane has a question.
Okay.
Hi. So my question is, I'm looking here online, I'm clicking everything. I can't figure out where the chat button is or the PowerPoint presentation to download.
I emailed you the participant guide.
Oh, okay. I will check for that, Delisa.
Okay.
Thank you so much.
And Diane, did you have a specific question, or is it was just a technical thing there?
It's mostly technical. This is all great information just to review. I actually had my husband walk in. I said, hurry up and jump on this. This is really important to watch because it does, if you're a husband wife team for a business,
Mhm.
number one fight that I've seen over the years for all of us CEOs is money related, and having someone else just reiterate what we're saying. This is so important to have. So I appreciate Delisa, Urban Chamber, and you for going over and actually spending the time to outline it. This is probably one of the better presentations I've seen.
Oh, great. And I know, Diane, you've been in business for so many years. You've progressed as a business owner, so I appreciate you being on the call and saying that. I think a lot of people can get value from you as well. You've gone through a lot of ups and downs and different bumps and bruises in your business life cycle as well.
Oh, that's true. And having a business, it's always a challenge, but if
Yeah,
it's something that is your passion and you're good at it, it is worthwhile to just weather everything that life throws at you.
absolutely. And I'm glad you said you got your husband on the call, but thank you for participating. And like I said, we'll jump back into the program here in just a few minutes. I know you guys are doing work, so I gotta show off my Raiders cup real quick, let you know what I'm sipping on. We had a bad loss on Sunday, but we'll get back. All right, I think we'll go ahead and jump back in a little early. I know I said 10 o'clock, but I think we got a few participants that have already completed the process, so we'll go and get rolling. So like I said, next step, business banking fundamentals. We're talking about reconciling accounts, deposit accounts, remote deposit scanner, interest, loans. We talked about some of these factors already, but what I want to jump into is the deposit accounts, right? A lot of times business owners rely on the bank too much to say they're going to catch things that come up with my account. So say someone's using a debit card inappropriately. Someone wrote a check that shouldn't have cleared the account. There are so many things that come up where they're saying, okay, the bank is going to catch that, right? The bank is going to come back to me and say, oh, this shouldn't have cleared or this shouldn't have happened. No, 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 no. You should have a system in place that allows you to be able to say, I'm going to reconcile those accounts on a day-to-day basis. And if it's I have a bookkeeper and I'm paying a bookkeeper, I have an employee that's responsible for that. I'm responsible for that as a business owner. There should be a process in place from a day-to-day standpoint that says I'm going to go back and verify what happened with my accounts. So that's a big part of reconciling. And you just never know what kind of leakage can happen, right? There's so much leakage that can happen and losing funds. When I say leakage, I'm talking about funds just disappearing from the account on a small amount basis that you just don't think about. And if you don't go back and reconcile the accounts, how do you know about them? Fees that the bank may have charged you, fees that you got from doing services with another company. There's so many things that can happen if you don't go back and reconcile the account. Remote deposit is a big one because you're going to deposit those checks. So, like we talked about before, you're going to have the scanner at your office. You're going to deposit those checks. A lot of times, there's times when those checks get returned. There's times when the check doesn't scan well. We can't read the MICR encoding, which is, I'm using banking terms now, but we can't read the code on the bottom of the check. We can't read the deposit, the actual routing number, the checking number, whatever, and that check didn't clear. Those are times where I say, okay, I need to go back and reconcile. Even though I have this scanner, I have online banking, I have all these things available to me, I still need to go back and reconcile. Did this go through properly? Interest, loans, those are another one, right? Interest and loans. I have a loan. I'm paying interest on that, and there's a benefit, right? Like I said, I'm going to tell you a little bit today that I know enough about to be dangerous, but I'm not an expert in. I'm not certified in. So we're talking about from an accounting standpoint. You can write off the interest on your loans, but what if you didn't account for the interest that you paid? Now you're not getting all the write-ups that you're qualified for. Loans, making monthly payments on your loan, it doesn't give you a benefit unless you account for the interest that you paid. So that's what I'm saying. We got to make sure we're reconciling those different accounts. We have a system in place to do that that helps our businesses. Protecting your business from online theft. This is one of those things right now that's really a hot topic in the banking world is online theft, online intrusions, all these different situations. Many of you may have seen the situations where large companies like Target, I think Target was one of them that got infiltrated, Bank of America, where people are going in getting people's account information, stealing their passwords, stealing their information and going in and accessing their accounts inappropriately, stealing funds and whatever, right? So ensuring computers have at least operating system antivirus, avoid using public wireless hotspots in areas, assure your staff thinks critically about emails, consider establishing a dedicated computer for online banking and cash management. This discussion I just had with another small business owner the other day, talking about not accessing your accounts from a public Wi-Fi without having proper security in place. And when I'm talking about proper security, once again, not an expert in this area, but we're talking about using virtual private networks, VPNs, right? Being able to disguise your IP numbers, right? Your protocol numbers, so people can't trace your laptops or trace your access points. Those are a big deal. And the funny thing, or I'll say the funny thing, but one of the things that's most interesting is your phone, your cell phone that you carry with you every day is going to be one of the most secure devices that you actually utilize. So maybe keep that in consideration when you're talking about I'm going to access my account and I'm not at my home office or I'm not at my work office where I have a dedicated connection where I don't have to worry about, well, not necessarily worry about, but it's less likely that people are going to access my account from those different places. People love to work in coffee shops. People love to go to these different WeWork type spaces and incubators. We have an incubator with the Urban Chamber. People may come to our incubator and say, I'm going to access the wireless network. and do my business and what have you, those accesses may be jeopardized by people that want to hack in and steal your information. So just be cognizant of that because it's becoming a very big issue right now. And people aren't paying attention to it enough as I think they should, because the hackers are getting smarter every day. They're finding new ways to access your accounts, and they're finding new ways to steal your money. So please take care of that as well. Next topic, commercial lending. This is one that's near and dear to my heart as a lender. I focus most of my career on doing small business lending, but we're talking about financing receivables, purchase inventory, lines of credit, term loans, or for fixed assets. Financing receivables. Receivables is one of those things where it's like, okay, how many different ways can I get financing? Do I need a line of credit? Am I going to go to a merchant processor? Am I going to go to someone that say, okay, they're going to buy my receivables from me and they're going to collect the income and I'm just going to get a piece of that? There's so many ways to finance receivables. It's crazy nowadays. But if you're a business that says I work on receivable income, I have 30-day terms, I have 90-day terms, whatever. Anybody that does business with me, they're getting terms, and I have to wait to a later date to get my income. Sometimes that doesn't work, right? Because you got payroll tomorrow, you've got product you got to buy today, you got different bills you got to pay today, and you're waiting on receivables that are 30 days out, 90 days out, 120 days out, whatever the case may be. So you have to find a way to be able to get money now to pay for those things that you need right now. And it may be based on the amount of receivables you have. Inventory is another one. You can use your inventory, right? If I have a large store of inventory or I need to purchase inventory on terms, I'm going to go to a vendor and say, hey, I'm going to pay you 30 days out, 90 days out, 120 days out for the inventory you're going to give me today. Those are buying things on terms using lending in a different way. Lines of credit, like I said, we kind of went into that already, but here's a big thing, right? I want to tell people you cannot use a line of credit to buy fixed assets, right? You don't want to use a line of credit to go out and buy a new truck, buy a new vehicle, buy equipment, because those are long-term financing options, and you're using a short-term financing structure to do it. A line of credit is going to be expensive. You're going to be required to make payments on it, and it's going to cost you way more than what you would have paid for that asset by using a short-term lending vehicle. So please, lines of credit short-term, term loans long-term, and like I said, term loans you're going to buy trucks, you're going to buy equipment, and nowadays you can even do things like starting a business with term loans. You can go out and pay payroll, do working capital. Refinancing your debt is a big one right now. People are extending their debt terms by using term loans, buying large assets like buying real estate. Those are a lot of the big things that are going on with term loans right now. And it really gets creative. And, SBA is near and dear to my heart. I know the title says commercial lending, but that really encompasses a lot of things: SBA, conventional lending, working with fintechs, which is a big topic right now, and some other companies that can be able to provide you the financing. Next slide, please. Business credit card. I think this goes back to our debit card discussion, right? Business credit cards are very, very valuable. They do a lot. They give you a lot of ease of access, and at the same time, credit cards allow you to have more controls than maybe even a debit card does. So that's one of the things to think about when you say, okay, I'm going to get a credit card for my business. I'm going to issue. So you may get a credit line from a company that says, okay, Bank of America is going to give you a $20,000 credit line. I'm going to split that credit line between so many people to be able to use this card and do business as they need to or as they see fit. So you're talking about convenience. That's a big deal, right? So, with a debit card, you can only spend what's available in the account. With a credit card, you maybe go up to a larger amount that allows people to continue business and allows you to do business and generate income in spite of what your debit or what you have available in your account. So that's why the credit cards are very available. But the risk once again comes in people misappropriating funds, people going out and I'm traveling, but I pay for drinks and dinner for myself, or uh, I pay for gas for my personal vehicle instead of for a work vehicle. There's so many things where people come up with risk. So just those controls become very important. And with a credit card, the technology that backs a credit card sometimes is more valuable and more interactive and more intuitive than say even the technology that backs a debit card, because a debit card is only tied to your checking account. And there's so many things that go through your checking account, where the credit card, there you have one account, one access to go through and say, okay, I can verify what happened with this particular account. So the benefits and risks of a credit card are very good. Next slide, please. Commercial lending, we talked about SBA. So this is the area that I work in, that I talk about all the time, is working with the SBA, Small Business Administration. SBA provides a great product that allows for business owners to get access to capital in a way that most conventional banks may not necessarily do without having the SBA program to do that. So what the SBA program does, right, is it provides a guarantee for your loan. If you were in the case worst case scenario to default on that loan, the SBA will say, okay, I'm going to step up. I'm going to repay this loan so that the bank gets made whole and you don't have to sue the business owner or the business individually to get made whole. The SBA is going to step up and pay your loan. That's the greatest benefit of the SBA program, hands down. But on top of that, guess what they do? Give you longer terms, interest rates that are more agreeable, gives you an opportunity to put less money down. So there's all these different things that the SBA does, but that biggest thing is the guarantee that they offer. Next slide, please. Yes. Oh man. Develop the five C's of credit. Do your homework. Ask questions. Build long-term relationships with your banker and improve your personal credit score. The five C's of credit. This is another one near and dear to my heart. I started my career as what was considered as an underwriter or an analyst. I went in and looked at people's financials, evaluated the financials, and went through. We're talking about credit, capacity, collateral, these different things that involve the five C's of credit, and really going through that process of say, okay, is this person a good borrower? If not, why? And how do we mitigate the risk of doing this loan? And that's what we go through, the five C's of credit. Do your homework, ask questions. I just can't tell you enough. Like going to a bank and say, even somebody like myself, 16 years of experience in the banking industry, ask questions. Come to me and say, "Hey, Jaron, I want to know, is this really true? I read this on the SBA website. I went on your website and I saw this. Please do your homework, do your research, and come with good questions that we can say, okay, this person is ready to do lending. This person is ready and say in a position to say, okay, I know he's gonna repay his loan because he's done his homework and he knows the ramifications. He knows the issues and things that can come with it if he doesn't repay his loan. And hey, he understands the loan process. A good borrower that understands the loan process, loans are going to go through a lot quicker. That's just the honest truth. Loans will go through much quicker when you already done your homework and are ready to get the funds that you need. Improving your personal credit score. I can't talk about this enough. Like I said, I mentioned this earlier. You and the business are only one step apart. You as a small business owner, the business and you are only one step apart. So if your personal credit is not up to par, you're not taking care of your personal credit, paying bills on time, have a diverse credit portfolio. I'm talking about having credit cards, having long-term debt, having all this diverse credit on your credit profile where your credit score can be strong and you can and the lender can go in and say, okay, I feel like this person can repay the debt. Those things can really affect your business. So really think about that as you move forward. Is what does my personal credit score look like? What does my personal credit portfolio profile look like? Even more than the score itself. Next slide, please. So finance, we talked about this already. Comparison shop. Go lender to lender. Myself as a banker, I'm not going to always be the best lender for you. So go out, shop interest rates. Work with the banker. Say, okay, is this banker jiving me? Is he telling me the truth? Is he being honest? Like, do I feel like I have a good rapport with him? Is he going to be the best advocate that I need him to be to present my deal to the powers that be that have the power of the pen? Those are things we need to talk about. Because as like I said, I'm telling you myself, I don't have the power of the pen. I'm not the person that's going to write the check for your business. So am I the best advocate for you? Am I the best person to go out and say, I'm going to make sure your business get the funds they need? Those are things you have to talk about. Understanding the types of financing, right? We talked about SBA. We talked about lines of credit, term loans. You really need a banker that's going to sit down with you and say, is this the best financing structure? Is this the best option for my business? We talked about the long term versus short term financing. Line of credits are not good for long term expenses, long term assets. You don't want to use a line of credit for that. So those are the type of things you hope you go to a banker and the banker talks to you about these types of things. It doesn't put your business in a bad position to not make money. Next slide, please. Commercial lending again. So we're talking about loan details, features, terms, loan types. This is very critical. Transparency in lending is one of the things that I feel like a lot of lenders struggle with. They don't want to be transparent for so many reasons during the lending process. I'm talking about really giving a customer information or a borrower in a small business the information that matters, right? What is the interest rate for my loan? What's the annual percentage rate? What is my effective rate for my loan? Am I on a variable rate versus a fixed rate loan? What's the term? What's my term of repayment? Am I getting a better term and rate than I could get somewhere else? And the loan types, we went into this before already. We're talking about short term, long term financing. Your banker should say, hey, I know this is what you want to do, but that doesn't make sense for what you really need for your business. That's what you have to want to expect from a business banker. And when you're going to a bank and talking about the services that are offered to you, I hope that someone sits down with you and says, hey, this is what you really need. This is what you really need to be doing. And we're going to put you in this term structure that fits your business best. The way you receive income, the way you receive revenue, the way you pay out the bills. This loan is the one that works the best for you. Next slide, please. Wealth management and retirement planning. I always get afraid of this section because, like I said, I know enough to be dangerous, but I'm not certified in this area at all. No license or whatever, but we're talking simple IRAs, 401ks, simplified employee pension plans, Roth IRAs, health savings plans. Once again, this really goes into what do you do with the net income of your business? And am I benefiting my employees? Am I benefiting myself? Am I saving for the future of my business? And am I saving for the future of my employees? So that's when we talk about these different products and these suite of products. It really comes down to that evaluation of, and I hope you go to a bank that says, okay, me as a banker, I'm not certified in these areas, but hey, I'm going to put you in touch with this person. This is what I do on a daily basis. I put people in touch with the right person that can give them the information that they're looking for. So when you're talking about these IRAs, 401ks, pension plans, Roth IRAs, savings plans, hey, what's the benefit of one or the other? Why would I put my money in one or the other? That's the evaluation that we have to talk about. But this is all free cash flow we're talking about, right? This is my business making money. I'm in a mature state of my business. My business has matured. I'm bringing in revenue to a certain level. I need to figure out what to do with this other income and this net income that I'm deriving. What am I going to do with it? Am I going to, like I said, am I going to benefit myself, my employees, or what have you? And we'll send those funds elsewhere. Next slide, please. So choose the right bank for financial needs. Banks offer a wide range of loan and deposit products and services. Keep your business and personal accounts separate. Take precautions. Man, key points, and I think I harped on them enough. But choosing the right bank, I don't think I can harp on that one enough. Please shop your bank, shop your bankers. Not every bank is going to be the right bank for you, and not every banker is going to be the right bank for you. And it gets a little funky because you may say, "Hey, I love the services that this bank offers, but I don't like the bankers that they have to offer." So you're gonna have to kind of think through all those different things and say, okay, what I value most as a business owner to make sure that my business is successful and really interviewing people, holding them to the gun. It's really imperative for your business. At the end of the day, you're talking about your livelihood, your legacy. So please be cognizant of that when you're talking to banks. We talked about this. The banks offering a wide range of services. Keep your business. Oh man, please, 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 do not pay your personal expenses from your business. All these different things. Please make sure that you have those proper controls in place. And take precautions. Like I said, just take the precautions, prevent losses. There's so many ways that funds can leak out of a business. Let's make sure that you're on par. Also, establish a cushion for unexpected expenses. That talks about lending, savings accounts. We talked about that. Know your personal credit score to improve your chances of getting a loan. Those 5 C's of credit that we went into as well. Build a strong relationship with the lender before, during, and after the loan process. I'm always a big proponent of who do you bank with? If you bank with them, go back to them as well. I think we're kind of coming to the end here. We're going to kind of wrap up this session. I know we went into a lot of information. I threw a lot at you in a lot of different categories. We're going to kind of open it up here as well. If there's any questions that anyone has, or anybody just want to talk about maybe some key points that they've learned, or how would you evaluate the training? I think we're going to open up the chat as well just for a few minutes, give people a chance to speak out. I'm not sure how many people we got on the call, but please, if you want to open up, I think we'll make that available to them just for a few minutes here. I think people are just being shy today. I know we threw a lot at them, but definitely, I hope you got a lot out of this session today. There's a lot of information to be shared. I'm always available. The chamber is always available. Delisa and the staff do a great job of making themselves available if they need to get directed to the right spots. So just think about these things as we went through the session, evaluating your business, different bank accounts, different questions to ask. Like I said, I know I threw a lot out there. Building a banking relationship over time based on your needs. And like I said, I threw a lot at you already. So hopefully those are things that you're thinking about as well. Just real quick to people, just think about it. I know we gave you a pre-test. There's also a post-test available that we're going to be sending out to you if it hasn't been sent already, for you to be able to give your assessment of not only this session and the information that came out, but some evaluation topics as well. Some things that you may want us to touch on it in the future as we do these sessions going forward. So I think with that, we're kind of coming close on the end of time. I think everyone that jumped on the call with us today, hopefully you got some good insights, some good information. And please keep checking back in with the chamber. The Urban Chamber is putting out some great programming, great information around these different topics. And it's been a pleasure to be with you this morning. And thank you again.